What's up, traders? How are you doing? Hope you're doing fine. I'm Edward. I'm the owner of Forex XL, Invest in Excel, Crypto XL. If you don't follow us, go and follow us on Instagram or also give us a follow here on YouTube. Today we are talking about smart money concepts, smart money trading. Is it real? Is it working? All these people talking about smart money trading, about institutions, about banks. Are they scams or is it real? Is it actually like someone does actually know how banks and financial institutions are trading? Here is this video to clarify all of these things. So let's get started. First of all, I'm gonna say smart money concepts. Yes, they are real, and we have no doubt about that. They are proven to work over time. Of course, not 100% accuracy, maybe not even 90% accuracy, but very good restored ratio, overall profitable over time. But now this is what we need to talk about. And later, in a minute, if you stay connected, I will show you also on charts. Now, what we need to talk about is that, first of all, it's not like you will learn these concepts and you will be profitable the day after. You need, like anything, like any strategy that works, need to be back tested. You need practice. You need to stay on charts. You need to do your chart work. You need to spend hours practicing, and that's key. And this is the truth about trading. And also, in my opinion, one of the most interesting parts. Like, what's the point of just being profitable one day after you start? The journey, you need to, enjoy the journey, enjoy all the hours that you're spending on the charts, enjoy the losses. It sounds crazy, I know, but you need to be thankful for all of these things, because the end goal, once it will be reached, it will be all worth it. Now, let's get back to smart money trading. So one thing that we have to say, after I say that, yes, smart money concepts are real, they work, and all of the things that I said, one thing that we need to say and clarify is that people are not trading like the banks. Because I see a lot of people on Instagram or whatever saying that, oh, I use smart money concepts, I'm trading like the banks. I'm not saying other pages. I support 100% of the pages that are on Instagram and that provide value. I'm saying about single people who maybe comment on my posts and they're like, oh, smart money traders trade like the banks. And we need to stop here and talk about it for a second. Nobody, and trust me, nobody is trading like the banks, okay? Nobody is trading like the banks except the banks. We are trying to follow the footprints that the banks and the financial institutions are leaving behind. We need to wait. We need to wait for evidence that they show us, and after that, we try to follow them. We try to follow the flow of orders that the banks have. Okay, this is crucial to understand. We're not trading like the banks. We're not trading the same way that the banks are trading. We are trying to follow the footprints of the banks. And many times we can be right and follow them the correct way. Many times we can not be right, but if the right risk management is used, if the correct risk to reward ratio is used, you will be profitable. Now, of course, compared to other types of other strategies, smart money trading gives you a very good risk to reward ratio and gives you a better understanding, I believe, of the market. Of course, maybe you were taught that just drawing lines. Let's go to the chart, actually. Let's go to the chart. All right. Maybe you were taught that just drawing lines, just drawing zones is enough, and then once the price is reaching that zone, or once the price is hitting that trend line right here, you will buy. And you never asked yourself, why is that? Why is price rejecting that area? Why is price not holding that area and just going through it. Why are we ranging? Why are we pushing so fast in a certain direction? And so on and so on. You need to ask yourself why. As long as you ask yourself why and you try to understand that why, you will improve every single day in your trading. And I believe, and that's why I really like some smart money concepts, that smart money concepts, again, really make you understand the why, okay? The why behind price. Now, as a trader, personally, I do use some smart money concepts, that's how they're called. But at the same time, I have a mix of my personal strategies mixed with some smart money concepts. It's not like, let me tell you, it's not like just, I don't know, supply and demand and enter with Wyckoff. Let's just say that. You can do that. It could be a good strategy if you are very good at understanding supply and demand zones, because there are many. You don't know if we will stop here, here, or here. If you are very good at understanding the best zones and spending a lot of time on the charts, you can be profitable, you can be okay with that. Now, my strategy is a mix of things that I learned in the past from other mentors. Of course, I had mentors. That's how is the only way you can trade. My only problem was that I waited too much time before actually joining some courses, some mentorships. I've been trading for 8 years, but I took 3 years to be profitable. So that's why I created my course to help people, become profitable possibly faster than me. And this is actually what we are obtaining with many of my students. Since I was talking about my course, if you want to join either the course or the VIP, you find the link here below. But other than that, let's get straight to the interesting stuff. So, as I was saying, my strategy is a mix of things that I learned in the past from other mentors, things that I noticed myself backtesting in the charts and creating my own strategies, and then, of course, some smart money concepts. Again, this is not about trading like the banks, because nobody can trade like the banks, but this is about following what the banks are showing us. Now, an example of this, first of all, I gotta make you understand a little bit how the banks are trading, and they are mitigating the risk the whole time. Now, the concept of mitigation, and if you go on their reports, like I went to read the reports of JP Morgan, Chase, Bank of, I don't remember the third one, but I read the reports, their trading reports at the end of the year, and they explain how they manage their trading. First of all, it was crazy how one bank had closed 100% of the days in profit. And that was crazy to see. It was the only one. The other two, it was about 85% and 90%. Because of course, keep in mind, banks lose money too. They're not 100% accuracy. They lose money, but of course, they make more money than what they lose. So, mitigation of risk. We need to understand what mitigation means. First, we will not talk about all the smart money concepts here. We have a video about supply and demand. We have a video about trend lines. You will see, go here on my YouTube and check them out. So, mitigation of risk means that they basically have both buys and sells open at the same time. So they have both buys and sells, 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 all open right here. And then they make the price, they push the price into one direction here to the downside, and all the sells go to profit. Okay, all the sells are in profit, but the buys, since they are mitigating the risk and they have both buys and sells open, the buys are in a loss. Once they decide where the price needs to go and they're pushing the price in that direction, we will have a retracement like this. they will mitigate the risk, which means they will exit the buys, which were in a drawdown. They were losing money with the buys because they pushed the price down. They will exit the buys, they will keep the sells, and we will keep going down with strong movements. Okay, and if you look at this, just to make you notice, by this move we left behind a supply area, which is where we mitigated the risk. Well, I mean, we didn't mitigate the risk because we don't have both buys and sells open, but where the banks mitigated the risk, they exit the buys, they kept the sells and push the price down. And then more mitigation, push the price down, more mitigation, push the price down. Okay, this is also what we saw today. GBP/USD pushing the price to the downside, waiting, creating liquidity, but we will talk about liquidity maybe in the future. I talk a lot about that in the course, or I will talk about that on my live trading sessions, because from tomorrow, actually, we are starting to do live trading sessions with all of my students. We will trade live once per week. Pushing back here, taking liquidity, but again, we will talk about that another time. Mitigating the risk, supply area, exiting the buys that they had open, pushing the price down from buyers to sellers. Okay, so this is how banks are basically trading. Now, are we able to catch this move to the downside? I mean, yes, you can be able if you recognize this as a very good supply zone and you just enter right here right away. But we also gotta say that there are some other supply zones. There is this supply zone, there is this supply zone which was already mitigated, but anyway, let's leave it. And then there is this supply zone right here, which can be considered the supply zone. And we went a little bit above it. A lot of people would have hit stop loss. Now, if you just want to risk it and enter every single time at every single supply or demand zone, and trust me, there are many supply and demand zones in the chart, then you can do that. Just make sure that you go and back test that and that you end up in profit. Now, in my opinion, is not the best option, as you're just blindly entering at a certain area, hoping that that area will be respected. Okay. Instead, here we can see how we reached the supply zone. We have a very good confirmation that we usually look for at this area. But anyway, other than that, we push to the downside. This push to the downside is breaking structure on lower time frames. We retrace in this area, this order block left behind. We reject it. And possibly on lower time frames, 5, 1 minute, 3 minutes, 1 minute, we see some good confirmations to enter and follow the evidence that the banks or financial institutions or whatever showed us. But if we don't see any evidence, it will not be that easy to be profitable overall. Because again, yes, supply and demand is a good concept, but if you just enter every single time at every single supply or demand zone, trust me, it will not be easy. Okay. With that being said, I hope you liked it. If you like videos like this, let me know. I will do more. I hope you understood how smart money is actually meant to be, and also how we are not institutional traders. We are understanding how the banks are moving price, and we are trying to follow that direction that they are showing us. If we traded like the banks, this will not be our way of trading. First of all, we don't have access to the information that they have, and not as fast as they do. And then we cannot predict anything, and we're not trading with their capitals, and also we're not hedging risk. We don't have both buys and sells open, and then we're not the ones, mitigating the risk and everything. We just try to follow what they're doing. I hope this is clear. I hope you liked this video. If you did, leave a like, whatever. And if you want to join, there's the link here below for my website. Here you go. This is my website, VIP channel for all the trades that I personally take on my personal account. Forex XL course. You can get my course to actually learn how I'm trading, what strategies I'm using and everything. And you get lifetime VIP included. So you can get also the trades that I'm entering. And then there is some one-on-one training. Let me say, I'll see you during the week and I hope you liked it.